The Trump bump, an unexpected catalyst for crypto. Donald Trump's presidency coincided with a period of remarkable growth in the cryptocurrency market. During his time in office, the value of Bitcoin surged from around $1,000 in early 2017 to nearly $20,000 by the end of the year. This unprecedented rise in value was not just a fluke but a reflection of deeper market dynamics influenced by the political climate. This might seem surprising at first. After all, Trump was not known for his embrace of new technologies, especially those challenging traditional financial systems. In fact, he was often vocal about his skepticism towards cryptocurrencies, even tweeting in 2019 that he was not a fan of Bitcoin and other cryptocurrencies. However, a closer look reveals how Trump's policies and the uncertainty surrounding his presidency inadvertently fueled the rise of Bitcoin and other cryptocurrencies like XRP. His administration's stance on deregulation, coupled with the unpredictability of his policy decisions, created an environment where digital currencies could thrive. The Trump years were a time of significant political and economic upheaval. From the trade wars with China to the government shutdowns and the impeachment trials, the period was marked by a series of events that shook the foundations of the global economy. His unconventional approach to governance, protectionist trade policies, and confrontational stance on the world stage created a climate of uncertainty and volatility. These factors contributed to a sense of instability that permeated financial markets, making traditional investments seem riskier. This had a ripple effect on traditional financial markets, making investors nervous and leading some to seek alternative assets like Bitcoin. The decentralized nature of cryptocurrencies offered a form of security and stability that was increasingly attractive in such turbulent times. Trump's election in 2016 sent shockwaves through global markets. The unexpected victory led to immediate reactions, with stock markets initially plummeting before recovering. This initial shock was a precursor to the volatility that would characterize much of his presidency. The initial reaction was one of fear and uncertainty, as investors grappled with the potential implications of his presidency. Questions about trade policies, international relations, and domestic governance loomed large, creating an atmosphere of unpredictability. Stock markets tumbled, and the US dollar experienced a sharp decline. This decline in traditional financial instruments highlighted the vulnerabilities within the existing economic system, pushing investors to look for safer havens. This volatility highlighted the inherent risks associated with traditional financial systems, prompting some investors to explore alternatives. Cryptocurrencies, with their decentralized nature and potential for high returns, became an attractive option. The Trump era, with all its unpredictability, inadvertently set the stage for the rise of digital currencies, making it a period of unexpected growth for the crypto market. Shaking up the system, Trump's election, and market uncertainty. The uncertainty surrounding Trump's presidency wasn't limited to the initial shock of his election. From the moment he announced his candidacy, Trump was a polarizing figure. His unconventional approach to politics and governance created a sense of unpredictability that permeated the financial markets. Investors, who typically prefer stability and predictability, found themselves in uncharted territory. Throughout his term, his unpredictable decision-making and penchant for Twitter diplomacy kept investors on edge. His tweets could move markets in an instant, creating a new kind of volatility that was difficult to manage. Whether he was announcing new tariffs on China or making bold statements about foreign policy, the markets reacted swiftly and often unpredictably. Whether it was trade wars with China, tensions with Iran, or domestic policy battles, there was always something to rattle the markets. The trade war with China in particular had far-reaching implications. Tariffs and counter-tariffs disrupted global supply chains, affecting everything from consumer electronics to agricultural products. Investors had to constantly reassess their strategies in response to the latest developments. This constant state of flux made it difficult for investors to make informed decisions, further fueling the appeal of alternative assets like Bitcoin. Traditional investment strategies seemed less reliable in such a volatile environment. As a result, many investors began to look for assets that were less correlated with traditional markets. The traditional view of Bitcoin as a safe haven asset was put to the test during Trump's presidency. Bitcoin, often referred to as digital gold, became an attractive option for those looking to hedge against market volatility. Its decentralized nature and limited supply made it an appealing alternative to traditional fiat currencies. Bitcoin's price often moved in the opposite direction of traditional markets, suggesting that investors saw it as a hedge against uncertainty. When traditional markets were down, Bitcoin often saw a surge in value. This inverse relationship highlighted Bitcoin's potential as a counter-cyclical asset. When the stock market dipped, Bitcoin often rose, and vice versa. This pattern was not always consistent, but it was frequent enough to catch the attention of both individual and institutional investors. The idea of Bitcoin as a digital gold gained traction, reinforcing its role as a potential safe haven in times of economic uncertainty. This inverse correlation, while not always consistent, reinforced the narrative of Bitcoin as a digital gold that could provide stability in turbulent times. The comparison to gold was not just metaphorical. Like gold, Bitcoin was seen as a store of value that could protect against inflation and currency devaluation. Trump's policies, particularly his tax cuts and deregulation efforts, also played a role in driving investors towards cryptocurrencies. The tax cuts were intended to stimulate economic growth, but they also led to concerns about increasing the national debt. Deregulation, while beneficial for some industries, added another layer of uncertainty to the market. While these policies were intended to stimulate the economy, they also contributed to wealth inequality and increased the national debt. The benefits of the tax cuts were not evenly distributed, leading to growing concerns about economic inequality. The rising national debt added another layer of complexity to the economic landscape. This raised concerns about the long-term health of the U.S. economy, leading some investors to seek alternative assets like Bitcoin as a hedge against inflation and economic instability. The combination of market volatility, policy uncertainty, and economic inequality created a perfect storm that made Bitcoin an increasingly attractive option for a diverse range of investors. Bitcoin, a safe haven in turbulent times. Bitcoin's decentralized nature and limited supply made it an attractive alternative for investors seeking to diversify their portfolios and hedge against risk. In times of economic uncertainty, investors often look for assets that can provide stability and security. Bitcoin, with its unique characteristics, has emerged as a potential safe haven. Its decentralized nature means that it is not controlled by any single entity, making it less susceptible to external influences that can affect traditional financial systems. Unlike traditional currencies, which are subject to government control and manipulation, Bitcoin operates on a decentralized network, making it resistant to censorship and government interference. This decentralized network is powered by blockchain technology, which ensures transparency and security in transactions. The blockchain is a public ledger that records all Bitcoin transactions, making it nearly impossible to alter or manipulate the data. This level of security and transparency is appealing to investors who are concerned about the integrity of traditional financial systems. This appealed to investors who were wary of the potential for inflation and economic instability under Trump's presidency. During times of political and economic uncertainty, the value of traditional currencies can fluctuate wildly. Inflation can erode the purchasing power of money, leading to a loss of wealth. Bitcoin, with its fixed supply, offers a hedge against inflation. Investors who are concerned about the long-term stability of traditional currencies may find Bitcoin to be a more reliable store of value. Bitcoin's limited supply of 21 million coins also added to its appeal as a store of value. This scarcity is built into the Bitcoin protocol, ensuring that there will never be more than 21 million Bitcoins in existence. This fixed supply creates a sense of rarity and exclusivity, which can drive up demand and value over time. For investors looking to preserve their wealth, Bitcoin's scarcity makes it an attractive option. Unlike fiat currencies, which can be printed at will by governments, Bitcoin's scarcity ensures that it cannot be devalued by inflation, making it an attractive option for investors seeking to preserve their wealth over the long term. The ability of governments to print money can lead to hyperinflation, where the value of money decreases rapidly. Bitcoin's fixed supply prevents this from happening, providing a stable store of value. This makes Bitcoin an appealing choice for investors who are looking to protect their wealth from the effects of inflation. The uncertainty surrounding Trump's presidency also highlighted the importance of diversification in investment portfolios. Diversification is a key strategy for managing risk in investments. By spreading investments across different asset classes, investors can reduce the impact of any single asset's poor performance on their overall portfolio. The political and economic uncertainty during Trump's presidency underscored the need for diversification, prompting investors to explore alternative assets like Bitcoin. Traditional assets like stocks and bonds were seen as increasingly risky, prompting investors to explore alternative asset classes like cryptocurrencies. The stock market can be volatile, and bond yields can be affected by changes in interest rates. In contrast, Bitcoin operates independently of traditional financial markets, offering a unique investment opportunity. As investors seek to diversify their portfolios and reduce risk, cryptocurrencies like Bitcoin have become an attractive option. Bitcoin, with its low correlation to traditional markets, became an attractive option for investors seeking to reduce their overall portfolio risk. The low correlation means that Bitcoin's price movements are not closely tied to those of traditional assets like stocks and bonds. This can help to balance a portfolio and reduce overall risk. As more investors recognize the benefits of including Bitcoin in their portfolios, its role as a safe haven in turbulent times continues to grow. Deregulation and disruption. Trump's impact on the financial landscape. Trump's promise to drain the swamp in Washington resonated with many Americans who were disillusioned with the political establishment. His pledge to roll back regulations and reduce government bureaucracy was particularly appealing to businesses and investors who felt that excessive regulation was stifling innovation and economic growth. In the financial sector, Trump's deregulation efforts focused on dismantling parts of the Dodd-Frank Wall Street Reform and Consumer Protection Act, which was enacted after the 2008 financial crisis to prevent another meltdown. While proponents of deregulation argued that it would unleash economic growth, critics warned that it would increase systemic risk and make the financial system more vulnerable to another crisis. Despite the ongoing debate over the merits of deregulation, Trump's policies created a more favorable environment for businesses, including those operating in the cryptocurrency space. The relaxed regulatory environment made it easier for crypto startups to raise capital and innovate, contributing to the growth of the industry.